Welcome to the channel. I'm James, and today we're going to be looking at Microsoft after their massive earnings release yesterday. What we're going to be doing is going through all of the financial statements. Then we'll be looking at discounted free cash flow models and the Buffett-Graham intrinsic value model to give my fair value on the stock based on these updated earnings. So if we have a look at Microsoft right now, you can see yesterday it finished the day at $288.49. It is now up to $303, up $15.05% in the pre-market. So is this the opportunity to buy? You can see from this time last year, it's actually up about 25%. But if we go to the year to the day, it's down 14%. If we just go to the chart here, you can see that it hit its all-time high at about $342, but has gone on a downward swing since then. So is this the time to buy the dip? We'll touch on some of the key points here. Revenue was $51.7 billion and has increased 20%. We're going to be going through that in a second. Operating income is $22 billion, which is a 24% increase. Net income up 21%, which is $18.8 billion. And earnings per share is up to $2.48, which beat analyst estimates at 22%. Now we just look at these highlights here. Overall, the productivity and business processes, $16 billion, up 19%. If we look at the things here, Microsoft 365 revenue up, consumer revenue up, LinkedIn revenues up 37%, Dynamic Products is up. On the intelligent cloud, this is Azure, which is one of their main revenue generators, up 46%, whereas the rest of the services are only up 29%. And then finally, with more personal computing, their second biggest generator, $17.5 billion, up 15%. So let's have a look at the financial statements right now. So we're looking at the income statement here. This is split between product and other services, and for the 3 months ended in September 31st, 2021, product is $20 billion and services and other is $31 billion, up from this time last year, 2020. Product is about the same, but services and other, which as I said before is Azure, is up almost $8 billion. That gives a total revenue of $51.7 billion, up from 43. And if we go to the 6 months ended, that is 97 compared to 80, so up massively there. If we just look at the how this is broken down, as I said before, revenue on all sectors are up. Productivity in business, 16 compared to 13.3. Intelligent cloud, 18.3 compared to 14. And more personal computing up about $2.5 billion, 51 billion in total. And as I said before, 97. These are split pretty evenly, but the main revenue generator for these last 6 months has been the intelligent cloud, which is the Azure services. What we want to do now is look at the profit, and the way that we look at this is revenue minus the cost of those revenue. Product cost of revenue is only $6 billion compared to $20 billion in revenue, so that is $14 billion made off that. Services and revenue 10 compared to 30, so that's 20 billion. So product still is more profitable, but they have more revenue going through services and other. So that gives a overall net income of 18.7 billion, up from this time last year, which was 15.4. And a very good story here, almost up 10 billion in the 6 months there, 39 to 29. And if we go to the breakdown of each one, productivity businesses 7.6 to 6.1, intelligent cloud up 8.1 from 6.2, and more personal computing 6.3 up from 5.2. So everything is up 22 billion compared to 17 billion, 42.4 billion compared to 33. So everything is up in terms of profit for Microsoft. The next thing we like looking at is on the cash flow statement, which is the common stock repurchased. We want Microsoft to be buying back those shares, and yes, they are again. This time last year, they bought back 6.5 billion, but now, $6.5 billion dollars worth of shares, not shares, and now they've actually repurchased more. So they are constantly buying back shares, up from the previous year, up from the previous 6 months, 13.2 to 15 billion. So that's what we want to see. We want to see Microsoft buying their shares and rewarding shareholders. Now we want to look at the free cash flow. Now this doesn't have free cash flow directly, but what we do to work that out is with their 18.7 billion in net income, they take off all of the adjustments, and that gives the cash flow from operations, which is 14.4, up from the previous December 2020, which was 12.5, and once again 39 to 31. What we do to see how this has increased is we take away their capital expenditures, which in this instance is the additions of property and equipment. So we take the net cash from operations, which is 14.4, minus the capital expenditures, which is 5.8, which gives you a value of the free cash flow on the quarter of 8.6 billion. which is up slightly from the previous years, which would be 12.5 minus the 4.1, which gives you about 8.3 billion. So cash flow is still up. And if we compare it to the 6 months, this would be about $27 billion and up massively from the equivalent time, which was only about $22 billion. So on the year, Microsoft has a free cash flow for the year of $60.6 billion, which is obviously an increase of 2020. Now we're going to use those free cash flows that we've calculated to give a fair value of the company. We've calculated future free cash flows, discounted them to today's value, and that actually gives us a value of Microsoft of $289.51, which is saying it's fairly valued at the minute. You can see here the net income margins have actually increased quite dramatically in 2020 and 2021 with things like I showed before with the products and Azure services that they're providing. I think we can be a little bit more bullish on these numbers. So let's say that this continues to increase and we get about 40% in the future, then that would give a fair value of $337, which is a 17% increase. So Microsoft, I think, is definitely undervalued at the minute on discounted free cash flow, but you can see how they are growing, and this can be definitely a free cash flow monster in the coming years. And then what we want to do is look at the Buffett-Graham intrinsic value. This takes earnings per share, expected growth rate into account, and analysts think Microsoft is going to grow at about 16% a year, which I think is a perfectly reasonable estimate. And with those $9 in earnings per share, that gives us a fair value of $371.96, which is a 28% discount. So both of the models are saying this is a buy. Analysts agree with a strong buy, 27 ratings, 26 buying, 1 holding, and that gives a average target price of this time in 12 months at $374, which is a 30% upside. On the lower side, it's even $320, which would basically mean the stock would stay flat all year, which is pretty unlikely. And on the high side, they have it at $425. So analysts agree with our models. Microsoft is undervalued at the minute. So I'm going to quickly look at some technical analysis on Microsoft to see where the stock is going on the short term. So firstly, what we're going to do is looking at some moving averages. The first moving average I like to add is a shorter one, which is a 50-day moving average. So let me get that added here. And then the other two is the 100-day and 200-day moving average. So we've got the 50-day in green, the 100-day in yellow, and the 200-day in gold. So what we actually see in here is some bearish price movement, obviously, as the price dropped below the 3 major moving averages. But if we look consistently from basically the dawn of time on Microsoft, apart from the pandemic here, let's just go back. This is from 2019. Let's just do from the pandemic. The price has only dropped below the 200 once, the March drop where all stocks were hit about 30%. And that was a massive buying opportunity there because Microsoft rebounded and went on one of its all-time bullish runs. So this would, I would say, is a definite buying opportunity because we rarely see Microsoft under the 200-day. Consistently here, you can see that the 100-day has acted as a pretty consistent level of support. And once again, it has dropped below that. But as I said before, with this 200-day breach, I think the stock is about to make a big move to the upside. Next, we're going to be looking at the MACD. And what this is showing is, once again, bearish signs because the stock has dropped massively. What we're seeing here is the histograms also switch, which is the signal lines crossing, and also the signal line and the MACD line have crossed below zero. It's actually, if we zoom out on the daily, this is once again the lowest Microsoft has been in terms of momentum since the pandemic. So I would say this is a definite buying opportunity. The only difference between this one was the massive swing it had on the upside, which is one of the largest that it's ever had in recent times. So I would say this is definitely a buying opportunity because do you think Microsoft is going to drop relatively more than it did in the pandemic? And then the final one is we're looking at is the RSI, Relative Strength Index. And I can imagine what this is going to show, but let's have a look. This is the daily one. Yep, Microsoft is in the oversold regions, which it has not been to this level on the daily since even the pandemic. It was 2019 and this massive sell-off here where it went from about, well, it's quite zoomed out, 120 to $95, but this has not been seen in a long time. So I'd say yes, bearish signals, but definitely a buy in my books. And then if we look at the weekly RSI is about the same as it was in the pandemic. So as I've said on all three of them, I think this is a massive buying opportunity for Microsoft. Fundamentally, the company is solid, but even on the technicals, this is in levels that we don't often see Microsoft in. So unless you think the stock is going to crash even more, which I doubt it is, and obviously it's had this rebound in the pre-market, I think this is a great buy. So anyone investing in this, I think you'll be very happy with it. Right, guys, thanks for watching. Please give a like on the video, and I'll catch you guys next time.